Right. Then as we agreed, so that was the first part of the today's discussion. It was about the lesson, the course outline. Now let us move on to the today's discussion. It's about introduction to accounting modeling. Right. So before we move on to the accounting modeling, so our starting point is first we need to investigate what is accounting. So that is, so this accounting modeling is part of the accounting in the broad accounting. So therefore we must first investigate what is accounting. In fact, this is what you've been referring from your A levels. So accounting is a process of identifying, measuring and communicating economic information to permit the informed judgment of users. So therefore, as far as accounting is concerned, it's a service activity. Our main concern is about the decision making of the users. So we need to facilitate the decision making of users. In that, we are supposed to generate the business information and communicate this business information. So therefore, accounting is about generating and communicating business information to facilitate the decision making of resource providers. So that is what the accounting. So then if you try to understand accounting as a kind of information system, so in fact, accounting is an information system. It has all the ingredients that it is there in a system. So especially, you know, if you take any system, there you should witness the inputs, process, and the output. So if you apply the same for the accounting, yes, in fact, in accounting, you would witness the inputs, process, and the outputs are there. So there can be systems as to the financial accounting information systems and as well as management accounting information that is there. So whatever the system that you would take relating to the accounting, you would witness the input, process, and output is there. So for example, if you take the financial accounting, you would be having inputs as transactions as inputs, and then there would be a comprehensive process. You would take the things through the books of prime entry to the ledger accounts, to the trial balance, to the financial statement. So the process is there, and the output, you have the complete set of financial statement. So therefore, in essence, accounting is a information system. So in broad, we can say it's financial accounting information systems as well as the management accounting information systems. The accounting information system is a system of collection, storage, and processing of financial and accounting data that is used by decision makers. So as far as the financial accounting information system is concerned, it is focusing about the external stakeholders, especially the resource providers, investors, and lenders. On the other hand, if you consider about the management accounting information systems, it would primarily focus about the management of the company, the management committee, the board of directors, and that is their audience. So in order to facilitate the management of the company, the management accounting information system is designed, right? Then if we try to figure out accounting modeling, then where it is placed in this broad accounting information system, where should these accounting models come from? So if you think the big picture, the accounting information system, you would see the accounting modeling is part of that. So someone had switched on the mic. Can you please switch it off? Right. So if you take this accounting information system, as I said, it is going to be the big picture. In that, accounting model is a part of that. In fact, there can be models in relating to different accounting functions. So as far as if you take financial accounting information system, it's all about generating and communicating the financial statements. So you have to generate the financial statement, and then you have to communicate those financial statements to the external stakeholders. So therefore, it's a broad area, right? So in that, you would be having some specific task, no? Say for an example, if you take that relating to the management accounting, you can take a particular task to be the investment appraisal. So if you think about the management accounting information system, a particular task that is there could be the investment appraisal. So in order to do the investment appraisal, you can develop an accounting model. You can develop an accounting model. Similarly, when you're going to have a kind of production plan, when you're going to decide about a production plan, that is also a particular function in a management accounting information system. For that particular purpose, you can develop a model. And if you take the financial accounting information system, think about the kind of depreciation. So a particular task could be the depreciation of property, plant, and equipment. So in order to calculate this depreciation, you can develop an accounting model. So you can in fact develop a model for that. So if you take a finance related example, if you take a kind of particular loan that you had approached, so you can prepare a loan amortization schedule. In fact, that is also a model. So therefore, in this broad accounting information system, it may be financial accounting or management accounting, in order to perform certain functions, so in order to perform a particular function, you can develop models. So therefore, the broad picture is going to be the accounting information system, in that to program different accounting functions. So you can develop accounting models. And that is where you place these accounting models, right? Okay.
There's a question from
Yeah.
one student asking whether they can consider the accounting software and the ERP system as examples of accounting models. No, those softwares actually, accounting softwares and ERP is the business softwares which we will use to handle all business organization activities. So these modeling is a very small part of software development, which basically develop for a specific purposes, very specific
Yes.
purpose. As Sir mentioned, if you want to develop something to accommodate your loan amortization, so you're developing a model to do that activity only. But in accounting software and the ERP is a large scale which covers almost all the business functions in one single software, which the marketing, management, manufacturing, productions, accounting, finance, everything in one particular software. It's a bigger version of all kind of softwares available. That is the latest and mostly expensive type of softwares using by the multinational company. But when it comes to the middle level of business organization, they may use accounting software to handle their day-to-day activities and generate the financial report. But you all know, when we have already learned the accounting software, you know those accounting software information what you generated from the accounting software is allowed to bring it to the Excel. Why? Because Excel is more powerful than the other softwares, whereby when it comes to the further analyzing data, further analyzing, filtering, and getting more what is required for the user, you should use the MS Excel or the spreadsheet packages, whereby it gives more effective tools where to analyze the data further. So graphical presentation, you get percentage calculation as you wish. You can predict predictions, and you can do the correlations, various kind of comparisons you can do by using Excel. That's why though you use ERP, though you use any other softwares available for your business organization, still it allows you to bring this information into the Excel, whereby you can further analyze. So Excel is most powerful in that sense.
Yes. In fact, just to add something to what the Dr. Kellam had said. So in fact, the Sage software, what you had learned, it's a classic example for accounting information system. So haven't you experienced everything? So there what you did, you generate and you communicate the information. So therefore it captures the whole accounting process. So if you think about the financial accounting process, it captures the whole accounting process. So therefore the Sage software, what you had learned, it is in fact the accounting information system. So it's an example for a accounting information system, the computer-based accounting information system, right? So the accounting modeling, yes, as Callum sir had very correctly said, it is just to perform a particular task, right? So that is to program a specific function. So again, if you go for this ERP software, yes, again, so that is a broad information system. So those are examples for the accounting information systems. In fact, the Sage software, the ERP, those are examples for the broad accounting information systems, right? Okay, good.
And also, sir, we have to encourage Lakshita and also say thank you for him
Yes.
asking this kind of insight questions. These are very, very important questions. If you ask these kind of questions, you get more information from us. That
Yeah.
will be useful for your working environment as well when you are doing certain things.
Yes, yes, it is really encouraging. Yes, so it will allow us to give you some more insight. So it is really appreciated. So likewise, so you may bring out whatever the questions that you have in. So therefore, it will allow us to go for more elaboration and to clear these concepts perfectly. So therefore, that is something expected, and that support is pretty much appreciated. Thank you very much, Lakshita and others. Yeah, there are certain other concerns as well. Yes, depending on the time, let's have a look at that. Yeah, the models, schedules, equations, and tables that are used as solution for the accounting substance described as accounting modeling. Yes, it in a sense it capture part of that. Yes, yes. In fact, if I answer this, Aisha, your question. So there you ask the models, schedules, equations, and tables that are used as solutions for accounting substance described as accounting model. In fact, that is the output of accounting modeling. As far as accounting modeling is concerned, in essence, there you need to have inputs, process, and output. So very clearly, you need to have these three ingredients there: input, process, and output. So therefore, yes, what you are referring here, it's going to be the output of the accounting modeling. But as far as the model is concerned, you need to very clearly identify the input. Input area needs to be there, because the primary purpose is we are thinking about manipulating. So not just for the given scenario, but for the different circumstances. Once you develop the basic model, it is capable of customizing for different business scenarios. So therefore, you are generating the output, the clear output area is there, then clear input area is there. Once you manipulate, once you change the things in the input, it must reflect in the output, right? So that is what the correct understanding of accounting model. In essence, it is something to do with input, process, output. As far as this process is
And
concerned,
also, Roshan sir, just to disturb you now, they need to link this input with the output by using the process. So that
yes,
process is the formula creation.
yes,
Why you create your formulas to link the input to the output, whereby the data can be manipulated by changing one or two variables available in the input area. So once the user change the variables available in the input area, immediately the effect can be seen in the output section, whereby it's linked with the two type of formula creations. We can link that with the model. So the output and the process is available in the same place. We cannot see the process in our accounting modeling, but process is happening. It's a formula creation whereby you link the model input and output together.
yes. Yes. Thank you very much, sir, for the clarification. And here, there's another question that. So we'll take this is as one last question, and let's move on. So you asked that simply, if we create an Excel for a bank reconciliation, like a template, would it be an example for accounting model? Yes. So exactly. So if you clearly identify some input area,
Yes.
and if you clearly identify some output area, as long as when you change the input, if it reflects in the
Yes.
output,
That
it's
is not the typing. That is not the typing. If you type every time when you go to the bank reconciliation and type that data into the model, that
yes,
is not the modeling.
yes.
So you need to have clear-cut input area where you input the data into the input section, then the output need to be generated automatically.
Yes, that's the important thing. It is not
Yes,
just a
yes.
template. So you must have a kind of clear-cut, clearly identified input area. All what you change is the input, and then it should reflect in the output area. So therefore, it is not just the template, but it is supported with an appropriate input area. So therefore, all what you touch in a model is going to be the input. Once you manipulate, change the input, it should reflect in the output, right? Good. Okay, now let us come back to the lecture. The role of accounting modeling in accounting information system. Accounting modeling is the process of structuralizing and programming of various accounting functions in an organization in order to manipulate them to provide various information for decision makers. So here it answers what is a accounting modeling. What do you mean by accounting modeling? In fact, it is about structuralizing and programming of various accounting functions. So you are going to program different accounting functions which is capable of manipulation. So therefore the key term as far as the modeling is concerned, it is all about manipulation. So once you develop a model, it must be of future use. It must be of future use. It is not just a one-time use. If it is of just one-time use, it is not going to be an accounting model because it violates the basic principle of accounting model. If it is to be a model, it has to be capable of manipulating. So that's why we were saying you need to have a clearly identified input area and output area. And when it comes to the link, as Callum sir had said, it is taken care by the process, and the process most of the time taken care by the software itself. So by making use of the inbuilt softwares, you may be able to clearly establish the process. So therefore, the keyword is manipulation. Particular task, so you may apply the accounting model. So for the example, as we repeatedly taking, so if you are to see a loan amortization schedule, all what you can do is you can take some input area. So there you can identify the loan amount, loan period, and the applicable interest rate. All this information can be there. Then you may set the output, and there you have done the loan amortization. So once you change the input there, it is reflected in the output. So you may first develop the basic model, and thereafter it would be of future use. You can manipulate it depending on the different circumstances, and you may get the desired results done. So that is in essence the model. Then if you think about the history of this modeling, it is not something that is just started. In fact, the first attempts on this accounting modeling was witnessed in 1960s. So therefore it is more than like 50 years back or 60 years. It is 60 years back, the initial efforts was seen. The majority of these models were developed by highly trained specialists using programming language like Fortran and Hopper. So in fact, at that particular time, in 1960s, this would have been a kind of restricted domains of highly specialized people. So it was a restricted domain of highly specialized people because no one can develop a kind of model other than those who are having an expert knowledge on this, because it takes your knowledge on programming language. You need to have knowledge on programming language like COBOL, Fortran. So that is what it takes. So therefore it was a restricted domain of specialized people. As most of these models were extremely expensive and time consuming to construct, they were usually only constructed within large business organizations. So at that time, these models were only meant for large scale business organization. So only the large scale business organization could afford that because it comes at millions. So it was expensive and it was time consuming to construct that. So therefore it was only meant for large scale business organization. They were capable to afford that. Then with dramatic developments in the microcomputer technology and electronic spreadsheet software during 1980s, many business organizations began to build these models using microcomputer and spreadsheet software. So this is where the difference comes. So it was a story about 1960. It was a restricted domain of highly specialized people. But when it comes to 1980s, with the dramatic changes in the microcomputer technology and these spreadsheet softwares, then it becomes possible even you and me to develop a model today. So model is meant for even the general public. So it is meant for the person who is having a kind of just understanding about some spreadsheet and some understanding about computer. they can even manage to develop a model today. So it was because of the development in these computers and spreadsheet software. So today, more dominantly, we would see the Microsoft Excel. But before that, so what we used to have, in fact, so during the times of Dr. Callum, who used to learn that, would learn that. So the Lotus 123, that was the dominant package, which it was
Yes.
there. Yeah.
We were teaching our students from 1992, myself and the Professor Vikramaraj, this Lotus 123 is a package, kind of package was developed for the MS Excel at that time. So very similar.
Yeah.
But, still we have some textbooks available in the department. If the students are willing to see that, they can look at into those books as well, which is
Yeah.
available in the Accounting Resource Center, which was used to teach the Lotus 123. But it's more, Lotus 123 is having less functions now. The MS Excel is quite well developed and having more features added, and that can do a lot of things now.
Yeah. So that was the experience. So it was like more than 2 decades of operating Excel spreadsheet packages, right? So the accounting modeling is no longer a restricted domain of few highly trained specialists. Even it is meant for even you and me. So even less than that. The large and complex model may still be best developed using specialized modeling language. But you should not believe that the modeling is something that is totally taken care of by MS Excel. No, that is not the case. So as far as the large and complex model is concerned, yes, still there are some specialized computer language. So it takes like Visual Basic, the Java, C++, so the Python, likewise, this advanced programming language. By making use of advanced programming language, the large scale complex models would be developed even today. But many large models can even be developed using the spreadsheet software for planning, reporting, and analyzing purpose. But most commonly, even when it comes to this large scale model, this MS Excel is capable of handling that large scale databases, right? So therefore, we would say that, so it is one of the dominant packages when it comes to the today's business world. The Microsoft Office Excel is going to be one of the dominant packages. So therefore, in this particular course, we are using the Microsoft Excel. So we are going to witness the wonderful capabilities that it offers. Then let's come to the essence of accounting modeling. So in order to have you some thorough knowledge on accounting modeling, as we were used to say, the essence of accounting modeling is the input, process, and the output. So this is the essence. The model is something which is capable of manipulating. So it's a kind of structure, it's a kind of programmed accounting function which is capable of manipulation. So in that, when you are developing a model, you need to clearly identify some inputs. The process has to be there and the output. So if I'm to just take an example and take you through this, then it will make perfect sense. Just to take an example that is quite familiar to you, let's think about the investment appraisal. So you have learned this thoroughly in your management accounting course. There, you would have done this NPV application and IRR application, and you would have produced the desired result. So let's think that you are given a particular business scenario. You are given a particular business scenario. In that particular case, you are supposed to first identify what should be the inputs. Then what could be the possible inputs in a kind of investment appraisal question. Just to start, definitely there must be input as to the initial investment. So as far as the investment appraisal is concerned, there must be kind of some sort of investment has to be there now. So therefore you need to have something called investment as an input. So you may get this Excel open up, and then you may type the input, then you are going to list down some inputs, right? So one of the things could be the kind of investment. And the other thing, probably you are going to generate a particular output. So therefore you may be selling that. So probably you need to have some sales price. Sales price per unit is going to be another input. Similarly, there has to be a cost now. So there must be a variable cost per unit. So if you are manufacturing thing, in fact, let's say you are investing in a particular machinery, so therefore you are generating that. So the variable cost per unit has to be there. So that is another input. Thereafter, you may, depending on your experience, you would see that the fixed cost can be there, then the inflation can be there, and also the tax would come into play. So
and also, sir, you can give some example for each of these categories, then they will get more understanding. Operational variables can, other management policies, maybe the depreciation policy or the inventory policies, what is applicable, external variables.
But I thought of
some
then classifying that, just giving kind of general. Yes, thank you, sir. So then you can think about kind of taxation, and thereafter you can think about kind of discounting factors. Those are basically what we call the inputs. Then if you try to kind of do a kind of distinction between these different kinds of variable, so now we can put them under these different headings, no? So think about kind of external variable from what we had discussed, from the inputs what I had mentioned in investment appraisal question. What could be the external variables that it can be there? Probably the inflation, isn't it? So the inflation is a kind of strong external variable. So therefore, in a particular accounting model, when you are going to develop, you would witness some external variables like inflation, no? Then if you take a kind of input relating to the risk, what it could be? So that talks about risk. So what about the discounting factor, the cost of capital, what you would get in investment appraisal? So that is going to be a kind of risk related input. Then what would be the management policies? What about the sales price? So the sales price is going to be something to do with the management policies. And what about the project lifetime? So, once you invest in a kind of machinery, it takes like 5 years time. So you may, in every 5 years time, you may replace that machinery. So therefore, it is purely a management decision. So that is another input. So it is, you can broadly say it's a management policy. Then what about the operational variables? What about the variable cost per unit? What about the fixed cost? What about the sales price per unit? These are some operational variables. Then what about the demand? So it can even put under the external variables. So likewise, when it comes to this input, it can be of different types. It can be risk-related inputs. It can be external variables, management policies, operational variables. Likewise, it can be of a different range. So when you come across a particular practical scenario, you would see different kinds of inputs are there, right? Then what you do, then you are going to plan your output. So then from your experience, how to plan your output. So you are going to have a kind of particular structure done. So you may take the initial investment, then you take the sales, then you take the variable cost, then you would take the fixed cost, and thereafter the taxation. Likewise, you may be getting your structure done. So in fact, that is going to be the output. Then what about the process? Then how do you link this input and output? It is taken care by the process. As far as this process is concerned, so there are lots of inbuilt function you may have to make use of. So when you are developing this model, in fact, you may have to refer to different management relationships, mathematical relationships. Likewise, you may have to make use of your knowledge on sum function and your knowledge on average function, your knowledge on likewise division, multiplication. All these things need to come into play. So when you are planning your output, so therefore you would be using these mathematical functions. So in fact, there are some lots of inbuilt functions are there. So you may make use of that, and also the functions that you may develop. And apart from that, you may make use of some financial functions. So you would witness in time to come, when it comes to working out this NPV, you would witness that by using the NPV function, you can easily work out the NPV without an additional burden. Just make use of the inbuilt function NPV, you can work out. Working out IRR, it is nothing. So in seconds, you can work out. So they are what we call the financial relationships, right? So it is the process. And also you may make use of the logical functions. So especially what about the if functions, right? So you may make use of such kind of functions as well. Depending on the model what you would develop, you would likely to witness there would be different kinds of relationship that you would make use of. In essence, you are going to apply this process in the output section. So therefore, once you develop the basic model, what happens is you have a clearly identified input area, the clearly identified output area, and the process is embedded in this output. So once you change the input, so according to the relationship what you had introduced to the model, so you would get the desired result. That's how it going to work, right? So you may be having hands-on experience on this. So in the next week onwards, we'll be developing some models. So therefore, it will make more sense. And when it comes to these reports, there can be different kinds of reports, outputs, reports and analysis can be there. Especially the one I used to discuss about, it is a kind of the management accounting related function. It is about the net present value. So it's a kind of report that you would generate at the end of the day. And again, even in time to come, you would witness that we would be developing models for the computation of personal tax even. So once you are given information about the different tax thresholds and different tax rates, you would be in a position to work out a model to compute the individual taxation. So again, something that you would witness in the time to come. And not only that, we are going to do some production planning. So in the presence of limiting factors, in the presence of different constraints, you are going to witness how to do a kind of production planning. So therefore, it's a production related report that you may generate. And also, you may generate some financial statements. Also, if needed, the budgets can also be produced. So these are some of the examples for the report, what you would likely to generate as output in an accounting model. And analysis also, depending on whatever the output that you get, you can further analyze that using the capabilities that it is there in the Excel software. So you would witness that you can do lots of graphs. So especially if you do a kind of depreciation, if you develop a depreciation related model, you can show this depreciation and the accumulated depreciation in a particular graph. So you can do a graph and you can see that. So even when it comes to handling large scale databases, you may put them in different ways. You can slice and dice them, analyze them, and you can get different kinds of reports and the analysis done. So these are some of the outputs that the accounting model will have to offer, right? Okay. Yes, can are there anything to add with this respect? Yes.
No, I think everything is clear. But the thing, if the students are having any concern, they can ask.
Yeah, sure.
They can further clarify them.
Yeah.
But at the moment, we are talking about the basic theories behind this accounting modeling and how the model need to be developed. As you mentioned very clearly, we have to have a clear-cut input area, and also we have to have a clear-cut output area, which need to be linked by using the formulas. Basically, it may be the created formula, it may be the inbuilt formula, it may be the combination of created and inbuilt formula available in the system,
yeah.
which we have to make sure that we will generate what is required for the user.
Yeah. Yes, we would like to hear you. If you have any questions, concerns, yes, you may bring that. Then that will again benefit the whole group. So even while I'm moving on, so you can bring this concern. Then later I'll come back and let us clarify that, right? Okay. Now let's come to the characteristic of a model. Yes. So this is something again that would be better to have some sense on when you are going to develop a model, right? So you need to have some sort of general understanding when you are going to develop the model, how it should be and what it should be, right? So as far as these characteristics are concerned, there we identify 4 main characteristics that must be there in a particular model that you would develop. The very first thing is you need to think about the scale of this model. What do you mean by the scale of the model? It says that they aim to convert reality to a size that is more convenient and useful. You know, these models is developed for real world business scenarios. When you come across a real world business scenario, you are supposed to develop the model. But you know, as far as this reality is concerned, reality is quite confusing and it is fragmented. So it is not easily understood. As far as the reality is concerned, it's a kind of complex domain. It is complex and it is fragmented, right? So you can't easily make sense out of the reality. But when you are going to develop a model, when you are going to put that reality into the model, what you need to be conscious, so it takes some time. You need to think about that. You need to logically think about that. And then you need to convert this reality to a manageable stage. So when you are going to take the reality into the model, you need to ensure that it is manageable. You can easily manipulate the things and you can make some sense out of that. So that is what we call the scale. You are not going to put the reality as it is. Then if you do that thing, you may be ended up creating a mess. So when it comes to the models, you don't have to create a mess. You need to keep it as simple as possible. It should make sense to you as well as to the intended users. So therefore, that is the most important thing. It should be understood. So in order to make it understood, you need to convert this reality to a kind of manageable domain. So you have to create that reality, the complex domain, into a manageable domain. So think about the scale. So be alert about the scale. So therefore, if we request you to develop a model for a given business scenario, it should perfectly understood by us as well as you. So you have to think the point of view of the third party when you are developing this model. So think about the scale. Then the detail. So as we said, when come to the reality, there would be lots of details are there. So there may be necessary information, unnecessary information likewise. So it's a kind of complex domain. Then you must develop a skill only to extract the relevant information. So you need to first think about what is your output. By thinking about your output or the requirement of the user, so you must start from there. In order to facilitate that particular user's decision, you need to make sure that so you are going to extract only the relevant and minimum information. You can't make the model too long. You can't afford to have like hundreds of input. That is not the case. So it must be something manageable. Most probably it is something between 10 to 20. So in any given scenario. So nothing more than that. So therefore, make sure to keep it to the minimum, but at the same time, do not compromise the relevant. Relevant and minimum. That is the requirement. It is the detail. Then the flexibility.
There was a question from again Lakshita, so
Yeah.
we will answer that as well. Then we will go to the next discussion.
Yeah.
That means the decision taken based on the models may subject to the error due to the difference between the modeling and the real world scenario. No, actually, now if the real world scenario is not capturable by using the Excel, there are various other ways of developing the models. As we mentioned you earlier, we can use the languages, special language to write the program which capture the whole scenario and give that particular model. Now here scaling means you may be having necessary, unnecessary information available in your case study. So that need to be scaled down to the minimum level whereby you will give the real output what is required for the user. That's what the requirement need to be identified. What actually the user want from you, and then you have to develop the model to make no complications. When you are running the model, that model needs to be smoothly work. You cannot have the errors within the model. So if the Excel is not capturing that particular scenario, we cannot develop the model with the Excel, MS Excel or the open source software. Then we have to go for the higher languages whereby you can write down the program by using the Visual Basic or the database management packages and so forth. That is the situation.
Yeah. So in fact, that we are not going to compromise the accuracy. The accuracy has to be there. That is the essence, right? The model has to be accurate. So we are not going to produce something that will please the audience. That is not the case. We are going to capture the reality. So the reality is captured, but what we were saying that when come to the business scenario, it is quite complex. The complexity comes because of the relevant and irrelevant information are available. But you must be capable of filtering only the relevant information and the minimum information, thereby generate the required answer. So that is where the model, what do you call the, so that is where the model will give you the greatest benefit. So otherwise, no point of putting everything that is there in the reality, putting all the information that is there in the reality to the question and come up with the kind of answer. That is not the case. Only filter the relevant and minimum required information and generate the accurate answer. That is there, right? You are not going to compromise the accuracy. Accuracy is the essence. Otherwise, there is no point of developing the model, right? So that is the essence. Good. So likewise, it will take you forward. Okay. Then the flexibility. The aim is to be easier and less time consuming to manipulate than reality. You know, once you develop a model in a manual environment, the thing is, it does not give you any opportunity. Someone is speaking. Can you please switch off the mic? So can you please switch off the mic? So it is disturbing. So we need your support with that respect. Danuratno something. You are speaking. Yes. Danurad, can you please switch off the mic, please? Kinsey sir, can we mute all? Can you mute all? So the host is Kinsey sir. I believe that Kinsey sir got right? Right. Okay. So the flexibility. So if you take the model in a kind of manual environment, the thing is, so once you say that you do an NPV analysis depending on the given question, you may work that out. But thereafter, you can't manipulate the things. You can't change the input and see what is the effect on the output. Yes, still you can do that, but it comes at a huge cost. The cost in the sense, it will take huge time and it will take huge effort. But once you develop a model, the good thing is, if you develop a kind of spreadsheet based model, the good thing is you can simply manipulate the inputs. You can simply change the input and see what is the effect that it has on the output. For different circumstances, say that you want to change the initial investment, say that you want to double the initial investment. Okay, if you have 1 million, make it 2 million and see what is the effect that you have. Yes, it can be seen in no time. It takes no effort and it takes no time at all. So therefore, in that sense, the flexibility is there in the model what we develop in the spreadsheet. And also the cost. The aim is to be less expensive to manipulate than reality. So if you take this reality, so in order to, if you had done that in a kind of manual way, so if you had worked that out, no, it's going to be a kind of costly exercise. But if you do it in a kind of computerized environment, the cost that is involved with the manipulation would be nothing. It's just a matter of few clicks. By few clicks, you can change the whole set of inputs and see what is the effect that it has on the output. It's just a matter of few clicks. No cost is involved at all. So they aim to be less expensive. So if you do the spreadsheet model, then so it would have all these characteristics in place. The scale, so it is kind of manageable, stage, detail, minimum and relevant, flexibility, easily manipulate, cost, less expensive. So that would be the basics of the model development. You need to adhere to that in whatever the models that you are going to develop. Then nothing is perfect. Nothing in this world is perfect. So therefore, it is equally applicable even for the models. So when come to these models, certain limitations are there. So the model is capable of handling quantifiable data comfortably. As far as the non-quantifiable data, or we call it the qualitative data, which does not readily available for the quantification, so it would be difficult to be handled in a model. So most of the time, we may not incorporate the qualitative aspects into the models what we develop. So some sort of quantification has to be there. So as long as the quantification is there, the model can handle the data. So if it is kind of qualitative in nature, no, it can't be handled by the models. The model may only select detail. Significant factors may be accidentally omitted. So this is what the Lakshita had highlighted. So this is what the risk that the Lakshita had highlighted. So when we are going to agree on what is the minimum relevant information, sometimes there's a chance that we may miss some significant factors. When you are going to extract the relevant information from the reality, so you may sometimes miss out some of the valuable piece of information. So the risk is there. The models include only selected details. The significant factors may be accidentally omitted. And also, everything would be done in a kind of technology platform. So everything is done on technology platform. So whatever the risk that is uh, there for the technology, so these models would subject to that. So the technical error is there, the human error is there. So that would be the limitations of a model, what you would develop. Yes, so there's a question. Yes, that means that the decision taken based on the model may subject to error due to difference between modeling and the real world scenario. Yeah, so we have addressed this question. Yes. So I believe that, yeah, with that, so this is what the content, what we expect to discuss for the day. Now we can take another 4 to 5 minutes time. And if you have any questions, so we would love to answer that. So you may raise the questions.